So this is very important. So I was saying, trading is not something you want to sleep and you wake up and become successful. As a matter of fact, it happens in all industry. You cannot be a doctor, a teacher, or you become an engineer, whatever you are, and then you're sleeping, you want to become successful. If you sleep, poverty is going to take over you. It's just a simple phenomenon around the world, that there's nothing that you want to do that you're not going to give your time to it. So this goes out to everyone out there that are just joining us or having this passion, or just feeling like they need something extra to do, to create multiple streams of incomes, or even become a wealth creator and make a lot of money out of it, make a living, live the lifestyle they want, have the freedom they want. Trading and forex can give you all of that. All right. And then it's going to be how you treat it. How you're going to treat the process of becoming a forex trader matters a lot. So if you have opportunity where we are giving out free training like this, free content like this for you to learn, this might never come again. It's something that many people are paying thousands of dollars, hundreds of dollars to acquire the skill, because at one end, we are giving out value. We are giving out our time, we are giving out our skill, we are giving out our experience. We are willing to guide you through. And the only thing you have to do is to make sure that you follow through the process. Commitment, learning, ask questions. So in your case, we recorded the video last week, and that recording was purpose. The purpose was to make sure that every other person that did not attend that class should be able to, have something to work with within the week, and to be able to meet up with today's class. Because today's class, we're not starting afresh. We want to continue from where we stopped, so that if you miss out, you'll be able to match up, and from where we are, to be able to have this, be in the same page and have the same understanding. So if it takes you 1 week and you have not completed an hour video, like it was just about our class, you'll not be able to complete that. While some of us were live here during that period, that speaks a lot. And in our community, we do not, entertain people that don't have accountability spirit, or, we hold you responsible. Because if you're not responsible, it's going to look as if whatever we're doing, there's no result. We cannot tell that we are doing enough if you're not being committed. So please, if you are joining us for the first time, or you want to be part of this community and experience growth, learn this forex trading and become successful, we will hold you accountable. We will hold you. Have to be accountable for what you're doing on your daily life, daily trading routine. Are you studying? Are you marking your chart? Are you trading? Even if you're not trading live account, trade demo, follow instruction, and that is the only way to grow. Otherwise, I can tell you for free, this is one of the most difficult industry. Yeah, it seems very easy, even though it is easy. But it's easy to those who have mastered the craft. For you that is just coming in, you're going to be trading against institutional traders. You're going to be trading against banks. You're going to be trading against people with money. And probably you don't even have that kind of money to risk, right? So if you don't have that kind of money to risk, that what you need is your skill to be able to stay in the game, so that you can be able to become consistent. And it's going to take you a whole lot of, edge. You have to have an edge in what you're doing. Like, you have to master and become professional at what you're doing. Otherwise, you're just going to be using shortcut and be making money, and that's still fine. But if you're thinking of sustainability, longevity, you need to be committed. So guys, this is not a joke. We have been doing this for half a decade now, several years now, and then we can tell you the way it is. We're not going to lie to you on this platform, but we are willing to guide you through. We are willing to let you see the light, right? So thank you, Jerry, for being that honest. For every other person that joined us, you guys are all welcome. I want to believe that you guys are going to do better as we are moving forward. So at this point, I think we have enough people that has joined us for this session. So we're going to begin the class from where we stop, right away, because there's not much time. to speak. So we want to swing into action, and then we get to do what we have to do immediately. So tomorrow we are starting trading for the week. We will drop signals, we will drop analysis for traders, those that are trading with us already. If you have live accounts, that makes more sense. You're going to be making money throughout the week. If you don't have, I advise you follow our trading with your demo accounts so that you can learn and have experience, with what we do here. So make sure that you subscribe to the channel, because this is the main community that all the activities take place. And you can also write on this community. There's a discussion group that you can join where you have ability to write your comments and write your questions, and work with every other community member right here with us. So let's get started. In our last training sections, we stopped at trading section actually, which is trading time zone and all of that. That is where we stopped. So we already had treated. We traded what is Forex, how to make money from Forex, different market participants. We already have done that. We did currency pairs, what is being traded in Forex, which is money, and we talk about currency pairs, right? So we did all of that on our last class. So see how important that recording class is. It is for you guys, because we can't go back there. So you have to take your time and learn that. You need that information to be able to make progress. To be able to continue from where we stopped. So after this class, please, you go back and watch that video. You can watch it more than once to understand it. So we may not be seeing charts right now because we want to create the basic knowledge for you guys to, have the foundation. Because I tell people, whatever you want to do, have the knowledge first. Know what it involves before you get yourself involved in it, especially when it has to do with money. So you don't want to go into a place that you're going to be spending money, trading money or doing something with money, and you don't ask questions, or do investments. You don't ask questions. You don't get the basic knowledge, you don't get the basic knowledge to build on, so that you can make the right decision if you want to trade or not, if you are willing to put your money at risk or not. So you need to know exactly what it's all about, before you can start jumping into strategy. You understand? So we may not be seeing charts here today. Of course, we have our training sections or live trading sections for advanced students or people that are trading already on Tuesdays, where we do live trading. We analyze, you have strategy and all of that. So this session is basically for beginners. So if you're not a beginner, you're welcome. You can stay on the live with us. If you're a beginner, this class is for you. So let's get started. Let's talk about Forex trading session. So some people ask the question, when and where do the markets is being traded? How does the cycle of the market really works? What time can we really trade the Forex market? So Forex market is divided into trading sessions. And why is it being divided into trading sessions? Is because we have different regions in the world that are being traded, different markets, and the time zones are quite very different. So if you're in the part of this world like Nigeria, while you're sleeping in Nigeria, somebody else, is awake in the other part of the world. There are activities going on there. So because of time zone differences, the Forex market has trading sessions that are different time zones and depending on the different regions. All right. So the first of all is we have the Sydney session. So Sydney session is the first market session that opens. And by the way, this market trades around the clock. From the moment it opens to the moment it closes, the market trades round the clock, 5 days in a week, except for weekends. So every Friday, the market is going to close. In terms of Nigerian time frame, it's going to close around 10, 11 o'clock, depending. And then the market is going to open again around that time every Sunday. So like now that this is Sunday, by 10 o'clock or 11, the market is going to open. That is where the first session is going to open in Nigerian time. Sydney session is going to open. The next session is going to open alongside that. It's going to be the Tokyo session, right? The Tokyo session opens alongside after the Sydney session. And the next session that's going to open alongside is going to be the London session. The London session opens around 7 a.m., 6, 7 a.m. in Nigerian time. approximately 7 a.m. Nigerian time. That's when the London session opens, and then the New York sessions open about that time, or maybe 11 Nigerian time, where we have the New York session open. So what is significant about trading sessions? Let me explain why we have trading sessions. So one, trading session is going to help you know exactly when to trade in terms of trading instruments, in terms of trading pay, and all of that. So when you're trading a sickness session, for example, if you're trading a sickness session, you want to trade pays like, AUD, USD, JPY pays, because trading session traded into Tokyo session as well. So that's going to help you to know what kind of pay to trade, because that is where the volume is going to go through. The currency of that region, or the main trading currency of that region, is where the volume is going to really go through, right? And the same thing happened in London and New York session. So when the London sessions opens, you want to really be trading those pays that are like Europe USD, and maybe Europe pay or minor pays with Europe, and then New York sessions, US dollars and all of that. So that is exactly what trading session does. And apart from that, the kind of session you're going to trade will also determine whether you're going to have volatility, whether you're going to have liquidity in the market, right? So you want to know what is the best trading session for you. And this is going to help you figure out, based on your time zone, what's going to be the best trading session for you. There's something that we call overlap session in trading. So overlap session in trading is a simple session where we have two trading sessions trading together. And that example is the New York and the London trading sessions, more likely in the afternoon here in Nigeria. So these two trading sessions is where you're going to have the London sessions opens, the New York sessions are also trading at the same time. So this market are trading the two at the same time, two market trading at the same time. What that happens is that we are able to see more volatility. We are going to be able to see more liquidity. We are also going to see more of price movement, right? So because that is where the money comes in, a lot of money on the table, a lot of participants in the market. So you want to trade the market that you have more volatility, more liquidity, more people to trade, because price is going to move rapidly. As a trader, you are making money from price moving from one point to one point. If the market is stagnant, it's not market you want to trade, because you're gonna feel bored. Price is not going up, price is not going down. Probably the price is moving sideways. So this is the best time to trade. Most traders, you will ask them which time do you trade, they will tell you London and New York session. London and New York session. So this is why it's important you understand when to trade and what time to trade. So even for us, in some cases, we like to trade London and New York session. Otherwise, maybe we find our setup earlier enough, then we can stay on the trade, waiting for volatility to come during London and New York session. So as we progress, you're going to get to know, I'm going to help you get to know how to be able to, mark your time zones, to know when and where to trade, and all of that. So if you're using an Android phone, after now, I will drop a screenshot of an app that you can download that's going to help you to understand trading time sessions even more better than what I have just explained right now. So I will drop the link to the app. You go and download it, and just download and install. You're going to see it's called FX Hours. So it's going to display the time zone, and it also have some economic data that you can look into while you are trading during the day. So to add to that, I would say the sessions names are derived from major cities, which most of the transactions are done. For example, Sydney session represent the Australian sessions, other countries around the time zone. Tokyo sessions, sometimes it's called the Asian sessions. They also represent the Japan and and some of the Asian countries around that region. The same thing goes to London session. So the London session also is based on the region. All of that is where that's how it's been defined based on the trading region that you're going to trade. So the time zone is very, very important. So moving forward, let's get into liquidity. So I mentioned something about time zone before, and now we are on liquidity. So what does it simply really mean? Volume, liquidity, volatility, spread. All right. So I I mentioned that the time zone plays a vital role in your trading decision, or it helps you more as a trader if you understand when to trade. Because as a trader, you want to trade when you have these four things in place in very good condition. Now, we have high liquidity, we have low liquidity, we have high volatility, we have low volatility, we have low volume, and we have high volume, we have higher spreads, and we have lower spread. Most of these things plays out based on the time that you're trading. So in a case of a low liquidity in the market, simply means you're trading a time zone, or you're trading a trading section where we have lower participants. So when we have lower participants in the market, what that means that we have lower money. Money is not coming into the market that much, and you know that this market is being moved by money. How much money is being traded during that time, and that how much money is how much people are in the market. So liquidity there is people in the market. How many participants are in the market. So that forms the liquidity. That makes the market become liquid enough because people are there and people are money. People are not just there, they're coming to trade with money. And at the same time, volume. Volume also means money. How much in terms of quantity, right? So we can have a high liquidity in the market, high participants in the market, but we don't have enough volume. So the market is measured based on volume in terms of amount. In Forex, volume is equal to like money. When we talk about volume, we talk about how much, right? So volume also contributes a lot, and you want to trade the market when you have high volume, high orders. Volume orders, people are having a lot of volume traded in the market, which is money. Then volatility. So all of this is going to result into high volatility. So if you have high liquidity, high trading volume, you're going to have what? High volatility, which is the market is going to become volatile. And by becoming volatile, it means that in 1 minute, price can move from one point to second point. In 2 minutes, price can move rapidly. Change in price can be rapidly done when we have high volatility in the market. And then we now have spread. So spread is going to be your commission charge. How much are being charged during the course of trading, right? What is the trading condition as at that point? So when you have high liquidity, high volume, and high volatility, your spread is going to become small. The commission you pay is going to become small. Let me explain that in the layman's language. Let's say you're going to a market. Let me use, for example, Plaza here in Nigeria, precisely. If you're familiar with the dislocation of Plaza, and where you have people selling almost the same thing. This one is selling shoe here, that one is selling shoe here, this one is selling clothes, that one is selling at that in that area, and most likely they're trading the same thing. They are selling the same thing, right? So what's going to happen now is there's going to be a lower price. You can now afford to buy some of these items lower. The reason why it's lower is because enough people are there selling the same thing. So you're not going to pay higher amounts to buy that same thing. Unlike saying you're now going to, let's say you go to another place, like maybe another location entirely. You go to another location entirely. How you go to another location entirely, the price is not going to be the same because you have higher number of people looking at buying that same thing with what? With higher number of people looking at buying that same thing, but the people that are selling it are not enough, so the price is going to go. So it's simple about demand curve, right? So that causes how much you're going to pay. If the demand is there, you're likely going to pay, lesser amounts. If the demand is not there, you're likely going to pay higher amounts and all of that. So spread, you don't have the best time to trade and the best spread and the best trading condition when you have liquidity, high liquidity, high volume, high volatility. You're going to have the slowest kind of spreads to trade with. All right. So I don't know why my screen has just disappeared, but let me see how to disconnect that again. So give me like a minute. Let me try to share that screen again. Oh goodness. 1 minute, guys. All right, guys. Sorry for that. Trying to get my screen back. Okay, so like I was talking about spread, right? So spread is simple, the difference between the buying and the selling price. So it's also being measured in pips. We are going to come to talk about what is pips and all of that, and how to calculate pips, and know how to measure your spread. So we have different types of spread. We will discuss about different types of spread right away. So we have two types and two major types of spread. One of them is variable spread. So you want to take notes what I'm saying right now, because you're going to experience this when you're trading. We have a variable spread and we have a fixed spread. And then we also have been introduced to a kind of spread that we call, or a type of account that we call zero account. And some people call it ECN account. It's a type of trading account that is a no spread applied to. So some broker, you're going to see, they tell you, we don't charge you spread. We have a zero spread account. And some broker will tell you our spread is floating spread. Floating spread simply means a variable spread as well. So what that means is that let me explain that quickly. A variable spread is simple, means you're being traded based on price conditions. So we talk about volume, liquidity, and all of that. So these are the parameters that determines what kind of spread you have in the market. So if we have a low liquidity, a low volume in the market, what you're going to get is going to be a higher spread. Low liquidity, low volume, low volatility, you're going to have a higher spread. So the market condition, or even as well as the time zone you're trading, contributes to how much you're going to get in terms of spread. So everything is being linked up. The trading sessions you're trading, the trading pay you're trading, the instrument you're trading, it's going to, has effects to how much you're going to pay as a commission while you're trading. So spread is what your broker is going to charge you. Some of you may ask, okay, I registered with a broker and I made deposit, they did not charge me money. I made withdrawal, they did not charge me money. I started trading, they did not charge me money. What exactly are they benefiting? Why are they in business? They are not just there in business for fun. They are there in business to make money. In one way or the other, they're making also money from you. And that is the thing. Nobody's in business not to make money, right? But everyone is in business to take their own share of the market. So for broker, what they take from you as a trader is what we call spread. And spread is being measured in pips. And then it's the difference you're going to pay between your buying price and your selling price when you enter any position in the market. So for you to have a better spread, you're going to trade a session that, for you to have a lower spread or a better spread, you want to trade a session that has high volume, high liquidity, and all of that, which is what we discussed previously, which is more likely like a London and New York session, which is an overlap sessions in the market, right? In some cases, you're going to get a fixed spread. So what fixed spread is, your broker are going to provide you an account type that is a fixed spread. So what that means is you're not going to get charged whether the market is high volatility, is low volatility. They're going to charge you a certain fixed amount of pips when you're going to trade that particular account type and any instrument on that account, which is a fixed spread can be maybe like 10 pips, 2 pips, depending on instrument you're trading. And it could be 0 point something pips, right? So if you're trading something like one standard lot, you can pay as high as $10. If you're trading something like 0.0 lot size, either micro or mini lots, you can pay as low as $1 or as low as 0.50 cents for your spread. So one of the things that we look into when we are making choice of broker is that we look at this commission base. How do they charge traders? Do they charge high or low? What is the condition of their trading? So when we say trading conditions, these are the things that we're looking at. That do they have this very good trading condition for traders to be able to maximize make profit with. So that being said, I think I've highlighted the three different types of spread. Majorly is two, which is variable and variable fixed spreads, and the other one is the one they have introduced, which is ECN type of account, and more like a zero commission type of account. But even though we have that zero commission account, we'll talk about other way they can charge you, which is swap. Swap is simple when you keep your trade overnight. So if you trade around the clock and you have a position that stays overnight, they're going to charge you swap fee. And swap fee can also, depending on the volume size you're trading, it could be $1, it could be $2, it could be 10, it could be as high as $100. That is if you have a bigger account. So for the broker that we introduced to you the other time, which is Octa Trader, it gives you a very good trading condition. So you're not going to have high spreads. You're not going to have swap fee. So even if you hold your trade for like 1 year, you're not paying any more than any other thing than the spread that you already paid before, which their spread is a floating spread, and it's as low as 0.0 something pips. That you're not going to even notice the difference on your account size or your trade volume size. So those are the reasons why when we make recommendation, we look at all of these trading conditions with the broker, and then we say this is what we're using, and this is the best place to use, and we partner with them and trade. So before we round up this session, I'm going to come back to that broker thing, because some people were asking some questions about, should I use Binance to trade? Somebody was asking in the DM, they don't want to use any other pay. They don't know anything. They said they want to make the choices. They don't want to follow instruction, but we'll come to that. For now, so I've already talked about the high volume, the low volume, conditions, the effect that it has to do to you as a trader. So market participants doing large numbers of trades in a certain currency pairs. That is what means high volume. Low volume simply means not many others happening. Holidays, end of London sessions, beginning and off Sydney sessions. So what that means is you're going to have some of these conditions when the market is opening. If the market is just opening, you're going to have what we call seepage, yes, which is high spread, because at that point, not many people are trading. So at the beginning of any trading session is not a good trading hours, not a good trading time for you to start trading. The same thing when we have a closing session. So let's say London, New York sessions are closing, or New York session is closing in the evening, and then you want to start trading that time. You're not going to see any volume, and as such, you might likely pay higher commissions and higher spread, and the price is not going to go anywhere because the market is closing at that time. So those are one of those worst trading hour or trading time one could encounter in the market. So you want to take note of that. And I think I've also highlighted high volatility, low volatility before. So what that means, when conditions in the market being changed rapidly. So high volatility, big moves take place, major news releases, traders, paradise. So what that simply means is that when you have economic data or economical events, you're going to see high volume and high volatility. So when they trade something like NFP, CPI, FOMC, that is when you're going to do what? Enjoy the market the most, because price is going to move rapidly. So major news are being released. You're going to experience high volatility, big moves take place in the market, and all of that. The opposite other way around. Sluggish markets, no major news released, traders' nightmare. So traders' nightmare is when you don't have prices not moving. You take a trade from morning till night, nothing has happened. That price has not gone anywhere. You don't want to trade that kind of a market. So take note of that. And so let's talk about pips. The other time I mentioned that we trade spread is being measured in pips, and it could be as low as 1 pips, 2 pips, 3 pips. So what is pips in essence? So let's discuss that as we're moving forward. So pips is simple, a unit of measurement to express a change in value in the market. So pip is nothing more than a 4-digit number after the comma. When you're looking at the chart, you're going to look at the right hand side of the chart. You see your price tag, and you're gonna have like 1, 2, 3, 4 digit there that indicates price in the market. So usually for every other pair except yen and gold. Yeah, except yen and gold. What I mean is, I said Japanese yen and gold. The pips value is usually the fourth digit on your price. That's what the pips value is. So we'll see how that is being calculated. So pips is simple, a unit of measurement. So let's say you are an electrician. You want to measure you do your measurement based on voltage, currents, and all of that. It's the same thing in markets. We measure price impacts, price movement in pips, right? So it's a unit of measurement for us. Sometimes you measure in points, but pips, you convert it to points. And it's pips that is also being used to convert into monetary value. How much you're going to get is how much pips you're able to accumulate, right? So how to calculate pips is simple. You're not going to be doing this when you're trading. You just have to have an idea how it works. Okay, so some of you have not seen numbers, mathematical numbers, and probably will be afraid. So it's simple. So to calculate pips, you just need an entry price and exit price. That's what you need to calculate, and you subtract. So subtract your entry price from your exit price, and you subtract, and that's what you need. You're going to have pips number or pips value. So when you subtract, you divide that number with the volume, which is 0.001. So the 0.001 is actually showing you the pip position, right? Which is the fourth digit, the fourth point on your price. When you divide that, you're going to actually get the number of pips. Like here we say that, like here we have New Zealand USD, where you buy or you sell at 4.56567. The pip number there is actually the sixth number here, and then you exit the price at 4.56772, and then the fourth number is actually the pip value here, right? This is where you start counting the value of that price movement. So how many pips do we have there? It's just for you to subtract. Either ways, you can subtract the first one from the second one, and you're going to have 0.00205 and divide that by 0.00 because it's the standard. The standard value is 0.001 for pips. So you divide that, you're going to get 20.5 pips. So you can try that on your own time. You're going to get, these are just examples. You might have to do that later. So this is what I was trying to explain, your entry price and your exit price. So how do you determine the entry price and the exit price? It's simple here. Look at this bar. This bar is your price bar. And this is where you take your video from, like an entry and exit price. So when you take your price here, if you're buying, you take your buy price, your entry price for buy. If you're selling, you take your entry price for selling. So in this case, this is an entry price. So this market order is actually a sell market because an exit price is below. So you buy high, and then you sell low. So your entry price for buying is going to be higher, and then your entry price from selling is going to be higher, and your exit price from selling is going to be lower. So you pick these two prices, and then you use it to calculate the price difference. So lot size. So in trading also, we deal with lot size. Lot size is simple referring to volume. Like what I told you about before, you use pips to calculate your monetary value, how much price movement you get, and then how is your broker going to pay you is going to depend on lots, which is your volume traded. Now let me explain this. For example, let's say for example you're trading $100 account and I'm trading a $1,000 account, and then we have the same trade signals. You have the same trade signal at the same time. Probably we use the same price using a pending order so that the order can be filed accurately, the same price. So what's going to make me make more money than you is going to be what lot size I'm using, right? So let's say we had that same signal on maybe gold, and gold did like 50 pips price movement, or the change in price moved like 50 pips, right? So you make 50 pips with your $100, and I also make 50 pips with my $100. How is my brokers going to pay me? How am I going to get paid? It's going to be based on the volume I use, right? So if I trade the same volume as yours, despite my account difference, or despite the fact that my account is higher than your account, and I trade the same volume, you have a $100 account, you trade 0.01, and I have a $1,000 account, and I trade 0.01 with you, I'm going to, and we accumulate the same number of pips, I'm going to end up making the same amount of what you're making, despite the fact that my account is higher than your account, right? So that is what lot size does. So lot size is like, let me say, a box or a volume, or let me say, how do I put it for you to understand? Like a contract. Yeah, it's actually a contract where your broker interprets that contract with you, and it's going to use that contract size to pay you based on how much pips you accumulated in the market. So that is what lot simply means. It refers to a contract being met in a certain size. Purchase in bundle units called lots. They are standardized contract size. So we're going to see how lot size is being determined just right away. So like I mentioned about $100, and I also mentioned about a $1,000 account size. If we trade the same signal, the same volume, not really, the same signal, and accumulate the same pips, amount of pips, what's going to make the difference? So look at how it is being calculated. For every standard account, because we have 4 types of accounts in trading, which is one, a standard account, a mini account, a micro account, and a nano account. So for every standard account, you are required to have $100,000 to trade a standard account. I think I mentioned this when we had our first live training, where I mentioned that before now, it was not possible for retail traders to come into the market to trade if you don't have a minimum of $100,000. You cannot trade because at that point, you're not using leverage. You're trading your money. There's no leverage system in place. But now we are trading a leverage system. So things get to change, right? So I'll explain that more better as we progress. So with a standard lot, you are required to have $100,000 before you can trade a standard lot, and that equals to a standard account. And with a mini lot, you are required to have a $10,000 account size, and that is when you're able to trade a mini lot. And with a micro lot, you're required to have a minimum of $1,000 to trade a micro lot. And with a nano lot, you're required to have 100 accounts balance before you're able to trade this. So these are being represented in units. So hundreds, thousand, tens, and 100,000 units. So that is how it's being classified. So now for a standard lot size, for you to trade a standard lot size, which is 1.0, the standard lot size is 1.0. A mini lot size is 0.1. A micro lot size is 0.01. And a nano lot size is 0.001. Pay attention, I'm going to explain how this works, right? So, and the previous slide that we saw talk about the unit where we have $100,000 equals to a one volume, which is one standard lot. And a mini lot size, is equal to 0.10. A micro is 1,000. So what that simply means that for you to trade without a leverage system, for you to trade a 1,000, for you to trade one standard lot like this, you need $100,000 to trade 1,000 to trade one standard lot. For your account to trade 0.01, you will need $10,000 as your balance or equity to trade this. And for you to trade 0.01, you need $1,000 to trade it. For you to trade $100, you need 0.001, which is the nano account. Now, how are you being paid with this volume? So for each price movement, each pip, like we mentioned the other time, you saw how that was calculated, and you saw the difference in price there was like 20 pips. So for each pip, you're going to get paid what? $10. So if you're trading a standard lot on $100,000 account, for you to make significant money, right? Or for you to make money, you have to accumulate a lot of pips, like 50 pips, 100 pips on a single price movement before you can actually make a very significant money. And that what means that for each of that pips accumulatively, you're going to make like $10 for each. So like the calculation we saw the other time, you multiply this, you multiply like 10, times 20, and then you're going to get how much you're going to make for that particular price movement that occur during that time. The same thing happens here. For each 0.01, you're going to make $1. For each volume or each 0.01 lot size, you're going to make what? $1. And this is also a micro or a mini lot. This is also called a mini lot. This is called a standard lot. This is called a mini lot. This is called a micro lot. This is called a nano lot, right? So for each mini lot, which is 0.10, you're going to make what? $1 per pips, right? Same thing goes for micro lots. For each micro lot, which is 0.01, you are going to make what? 0.10, which is 0.10 cents per pips. So that is how the money or the price movement you're seeing on your chart is being calculated and being exchanged for monetary value for you. These are the things that your broker does to be able to know how to pay you and the differences to pay. So like I was saying, starting the other example, the same thing goes with nano lots. So on this nano lot, you could barely have a nano lot to trade, except you're trading synthetic indices. So because most brokers don't provide this account type, this nano account type, it's too small. It's very, very, very small. So you barely, most brokers stop at micro lot, which is 0.01, right? And 0.10 cents per pips. Okay. The only place you can trade this nano lot is when you're trading synthetic indices. That you cannot trade 0.01. So because it's a different type of market. So now let me explain something again. I was saying without a leverage system, this is all the money that you need, an account type that you need to be able to trade and become profitable, or to be able to trade this kind of volume in the market. And you can see that you may not even be able to make a lot of money. For you to even make a lot of money, you have to trade and accumulate a lot of pips value, So, but the game changes when we have a leverage system. So for a leverage system, like we explained before, what is leverage? What that simply means that you can now trade this 1,000, this micro lots, this micro accounts, $1,000, and you can now impute a standard lot size on a $1,000 account. That was leverage has done for you. Leverage now gives you a borrowed capital called margin. Your borrowed capital is going to be seen as margin. And with that, you are now able to execute a higher volume in the market. And that gives you what? Potential to make even more profit with your small account. So if you traded $1,000 and then you now have 10 pips price movement, and then you're able to trade 1,000 lots. So that makes you make more money than somebody that has a $100,000 account without leverage. Do you understand? So that is what happens on the leverage system. So the difference on how much you're going to make if you trade a $100 account and I trade a $1,000 account, and you make, and we have the same trade entries, trade signals, execute the same time, except number of pips. You make 50 pips, I make 50 pips, same trading pay, and you make $10 and I make $100. The difference is simple on this thing that we are talking about, which is the volume at which you use to execute your trade, the volume. So know that high volume comes with high risks. So if you execute a high volume, the same way it's calculated to pay you in profit, the same way it's going to be calculated to pay you in calculated in your losses as well, right? So that being said, we can move forward. If you have questions, you can hold it. It's going to be time to answer questions, and you can write it down too on the discussion group. So let's talk about forms of trading. Forms of trading, guys. How do you actually trade now? What are the forms of trading? First of all, we're going to talk about fundamental analysis, and then we'll talk about technical analysis. Basically, there are these basic two types or two forms of trading. So they can be called forms, they can become types of trading. These are basically. So we hear somebody saying, I'm doing fundamental analysis. You hear somebody saying, I'm doing technical analysis. So what that means is before you arrive at executing any trade in the market, you must be able to understand these two terms, technical and the fundamental. Technical and fundamental. You have to understand these two terms. Without understanding these two terms, you basically don't know what you're doing. I can beat my chest. You don't know what you're doing. If you don't know what fundamental analysis are or technical analysis are, then you're not a trader. This is all where it begins, right? So what is fundamental analysis? So fundamental analysis is also known as news trading. When people are trading data, economic data, or when people are making trade decisions based on information, or based on news. News simply means information as well. Based on news, and then they make their trading decision based on this. They are simply exploring the fundamental analysis form of trading. And when people are making their trade decisions based on technical analysis, based on the tools that you have to trade with, something like charts, indicators, moving averages, whatever tools that you can find on your trading platform to do your analysis, even price itself. You hear something like price action, price patterns, all of this put together are form technical analysis. When you are making trade decisions, like you want to buy because of this, you want to sell because of that. When you are making this decision based on these, indicators that you have, charts that you have, moving average that you have, support and resistance that you have, price level that you have, when you're doing that, then you are trading the technical analysis way or the technical way. So which one is the best? Which one is the best? Anybody on the live section that can tell me which do you prefer as a trader? Is it the technical or the fundamental? If you have an idea, if you ever use any of these forms of trading to trade, you can unmute yourself and let me know. Let me not be like I'm talking to myself. I think I've talked too much to myself.
Hi,
Is
Greg.
anybody?
Hi, Greg.
Okay. Okay.
All right, it's
All right. Go
George
ahead,
Ben.
brother. Yes.
Yeah. So I prefer to trade using the technical analysis. Reason is because like you said, fundamental is based on news. So it is not every time as a day trader. It's not every time that we have news coming out. You understand? So most
Yeah.
of the times you use the technical analysis. You analyze the market. You see where you are certain to go into the market, and you see where you are sure to come out from the market. That's it.
All right. That makes very much sense. Thank you, brother. So, anyone else want to tell me which one you prefer, technical, fundamental? If you've been trading before now, if you're muted, you can lift your hands and you get unmuted so that you can speak. If that's okay. Anyone else? All right. So, yes, the two work hand in hand, if I should say. You cannot really do one and leave one. Fundamental analysis is as important as technical analysis. Technical analysis is as important as fundamental analysis, right? Yeah, there are people that will tell you, I'm pure technical analysis. I don't trade news. I don't trade fundamentals. Yes, you can trade one like it is, but you totally cannot really do without the other one, right? And you cannot also say fundamental analysis. I trade news data. I trade only data. I don't really do technical analysis. You're still going to need technical analysis. In the midst of you analyzing fundamental, you're going to go back to your chart and looking at price, performance and all of that, because everything is all about strategy. So these two forms of trading is going to make up a certain trading strategy for individual, right? So no one is really superior, no one is inferior when it has to do with it. But you have to master the art of technical analysis. That's what I tell people before you can even come to fundamental analysis. So if you master the art of technical analysis, and it's one of the most popular form, if you master the art of technical analysis, then you can now complement that with fundamental analysis. Like what my brother said the other time, you will not always have fundamental to trade with, like high impact news to trade with. So high impact news are very few, probably maybe 4 times in a month you have an high impact news to make a certain trade decision. And then, but technical analysis, you're always going to have tools, you're always going to have price, you're always going to have data to be able to trade each and every day, right? So you can see that these two can literally go hand in hand. So we are going to talk about the fundamental analysis and technical analysis even much later, because that is where our strategy is based on, our edge is based on how much and what do we use, how do we come about the concept of trading to be able to have a high winning rate using these two factors to make trade decisions. So that being said, we're going to stop our session here on fundamental analysis and technical analysis. We have already spent like an hour. We started from 8 o'clock so that some other people can go have other things to look at and digest what we have discussed so far today, right? So the class today is going to stop at this level. So if you have questions, you can bring your question. But before you leave, we're going to have one or two discussion, maybe like 10 minutes extra, so that we know what we do from here from tomorrow. Okay, so any question from what we've discussed so far? Any questions, something you don't understand? You've been here from 8 o'clock. I would like you to ask a question now.
Good evening, sir.
El Mahdi, good evening.
Thank you so much for this.
All right, you're welcome.
Uh, my question is about this.
Your question is about what?
It's about the tips.
Okay, the pips.
Yes, sir.
All right, go ahead, please.
How do we set our account on the standard, the mini, and the yes, sir, so that we can be able to get the tips?
Please come again. I think I didn't get that your question. Your voice is not clear. Ask the question again, please.
Okay, I said from the tips, how are we going to set our account on the set, like that's on the lot size, so we can be able to calculate the tips that we are going to trade on.
Okay, so this is how it works. First of all, what you need to calculate your pips, which is just a unit. You want to determine how much you have gained or how much price have moved in the market from maybe from the opening price to the closing price, or from an opening sessions to an closing sessions. You want to know how much has price expanded today. You know, how far has price gone today. You want to know the change in price movement, because that is what pips measure. Pips measure the changes in price movement. So all that you need is, in terms of trading sessions, you need the opening price and the closing price of the trading sessions, right? So it could be positive, it could be negative. So in terms of positive, that means that price has been bullish. So price has moved today, for example, 100 pips, a bull market, bullish about 100 pips today. Or price has been bearish today about 50 pips in terms of a bear market. So now you can now measure, somebody can, if you talk to another trader, you can have an idea how that market was impactful for that day, how far, how much have been made in that market if somebody was trading that market in the right direction that particular day. So that's one, the function of pips, right? And the other one is for you to calculate based on your gains or losses, your personal gains or your losses. So you want to know, especially it's used in predetermining your potential profit and also potential losses if you are a good trader and you trade with risk to reward ratio. So you want to know how much you're going to risk for a particular trade, and you want to know how much you're going to gain for a particular trade. So that's going to be in pips. And after that is done in pips, you can convert that based on the different volume you're going to trade with. If you're an asset manager where you manage multiple accounts, this is going to really help you. You can mute yourself when then you talk when you're done. This is going to really help you. Like you manage multiple accounts with different account size. you know, and then you have one signal, you're going to trade across all of these accounts. For example, you have to determine how much volume you're going to use to trade, because you've already done your calculation of how much pips you're going to earn in this particular trade. And that's going to help you to determine how much risks you're going to portion and what volume you're going to use for each trade based on your proper risk management. So all that you will need for that to be done is going to be your entry price and your exit price, right? So for you to determine your take profit, you will take your entry price and also calculate with your exit price and get the numbers of pips, you know. So you take entry price minus exit price, whatever value you have, you divide it by 0.001, and that will give you the actual price of what? The actual price of pips. That could be 20 pips, 50 pips, and then you use that to multiply with the volume you're going to trade with, which is like the account type that we saw, like 0.01. In terms of monetary value, 0.01 should be able to give you like $10. Let me go back there. Okay, I think he's here. In terms of monetary value, okay, 0.01 is going to give like 0.10 cents per pips. So you multiply that 0.10 pips times 20 is going to give you the monetary value. The same thing with the standard lot. Maybe you trade a higher account and you wish to reach a higher volume, you know, want to gain more, you use a standard lot. So it's going to help you determine your risks and rewards before you're even in the market. So that is how it's being calculated. And funny enough, you don't really need to do some of this calculation. Your MT5, currently MT5 does the calculation, and I will show you your placement. Once you place your entry, place your stop loss, place your TP, you just tap on the screen. It's going to calculate and show you how many pips and how many pips accumulating there and how many monetary value you're going to get in terms of risk or reward and all of that. Is that clear? Madi, are you there? Okay, you're still lifting up your hands. Okay. Is that clear enough?
Yes, sir. So now our money now and dollar. Hello?
Yeah, go ahead. We can hear you.
Sir. Yes, sir.
Go ahead, I'm listening.
Okay, so my lot size now will be determined based on the dollars I have in the broker.
Yes, exactly. Your lot size is determined based on the amount of money you have on your trading account and based on the kind of risks you want to trade with, you know, and that is also based on the leverage, how much you want to leverage with your broker. But if you want to stay, use the proper risk management, this is where you now use to make that decision properly. Do you understand? Okay, so if you have further questions, okay, if you have further questions, you can write on the discussion group. I think I've answered your question properly. So anyone else with a question, you can lift your hands and ask the question. I saw Jennifer, you're just joining us. Gracie's, you're just joining us. So after this class, there's a recording for this class. You come back and and pay attention. Maybe go to the video game because we've already been about an hour time now. Some other question, please. All right. So since we don't have another questions, let me briefly address some other people that are just joining us before we bring this class to an end. So one, this is the second time that we've had this class. We already had this class last weekend where we started with what is Forex, basics of Forex to this point. This class is actually a continuation of that previous class, which is next week. We're also going to have another class this same time, which is going to be a continuation of this one. So you don't have to miss. So if you had missed the previous class, the first class, there's a video for that class that you have to go and watch. The essence of you watching that video is not for my benefit. I'm not gaining anything if you watch the video. The YouTube that you're seeing there is not being monetized. It's just to host this content for you to come back and see it. So you do yourself a favor and go back and watch the video to learn the basic foundation of where we started from. That's why we call this class Forex Foundation, because we want we want you to have the basic knowledge, the basic understanding, because people skip process, and it's not good to skip process of anything. I have a lot of people that will send a DM and they will tell you, I want to start Forex. You tell them you have to learn. They said, how long are you going to take me to learn? And you tell them 1 month, if you're committed, you can learn. Or you tell them 3 months, if you know what you're doing, 3 months, you can learn. They will tell you, it's too long ago. Can we do it? Can you just show me 1 or 2 things? You don't need 1 or 2 things. Anybody that says, can you just show me 1 or 2 things? As a matter of fact, I'm going to do 2 things to that kind of person. 1, I'm going to call a price for you to pay. If you cannot pay, you don't have my time. Or I'm just going to leave you for you to go to some other community and go and learn 1 or 2 things. So that is the essence why we have this class, because we don't like skipping process. If you don't have the foundation right, there is nothing we can build on top of it that's going to work. Is it strategy that will come to teach you how to trade strategy where you cannot even navigate through your broker end? It's not going to work, right? So that's why we do this class. So please watch the video. You can watch it more than 1 time, 2 times. We might even drop an ebook for you that's had some of these other topics elaborate or explain in a certain way that you could even understand it much better. You read them through again and again. Understand this so that you will know what to ask, where to ask a certain question, right? So that's what I wanted to tell you. Next weekend, we are going to continue till we finish the Forex Foundation. And mind you, for those of you that have been trading already, I've already passed this level already, we have a mentorship program that is ongoing where you can learn to master our trading strategy. We are not keeping a secret. We teach you how to trade, how to analyze the market, both the fundamental and the technical way, the way we do, so that you can become an independent trader and be able to boldly make trade analysis and make trade decisions and make profit from them by yourself without any assistance of any mentor with you. So that's what I want you to know. You can also be part of that. You can also be part of that mentorship program. It's a mentorship program for the year. We will drop few content. We'll probably have some recorded content and also have some special advanced class with some of those in that community participating in that mentorship program going. For now, the mentorship program is actually running for free. Even though there are some other conditions that you have to meet up to be able to join, it's for free. We're not charging anybody for now. We might add fees to it later on. And for those of you that don't like when we now schedule our class by ourselves, you want your time, you want to learn this faster enough, you want to have the time for yourself, we have a program that is one-on-one mentorship. That is what we charge here. So if you need us to make a live session for you, teach you personally in your own time, depending on the work schedule and all of that, teach you our strategy, mentor you for the entire period of our entire quarter or entire session, we have that service available for you. Then we have a fee for that. You can pay for that advanced class, advanced mentorship 101, where you have a personal coach that will put you through the market and tell you how you can actually make money from this market in a no time. We'll give you that information. So you can message and then you will have that being discussed and we'll tell you what you do. We'll go about that, right? So those are the information. Ellie, Frederick, I'm going to unmute you after now so that I can speak. I see you're lifting up your hands. So those are the things that we do. And in our community, we have every day we are trading. We have free signal every day. For the past how many weeks now, we've been very, very profitable and the market has been very, very good. Some days we can make losses, but throughout this almost 2 weeks now, nobody has recorded losses in our community. I'm not saying it happens like that every time. Depending, some days you could take losses and you move on the next trade. That's how we trade. So we put effort in making sure that everyone that works with us is able to take money from the market rather than giving out money from the market. In such way, we provide you support with our trading signals. We provide you support with focus, where we drop our view, what we're looking at in the market. We provide you even with live trading sessions. Every Tuesday, we come live. We analyze the major pairs that we're looking at. You ask questions if you're analyzing. You can even send your request of what pair you're trading. If you're trading a different pair and you want to know what the market is telling you, you send your pay request, we do the analysis together, and you can see the market in view together. So we do that every Tuesdays, and most time we do the recording, and you can have that recording later on. All right. So we also drop other contents that could help you in terms of trading psychology and build you up as a day trader, so that if you have a job today, you can give yourself target in the next 1 year. I want to become perfect in trading. I want to become professional in trading so that I can make money and probably quit my job and have a life of my own, or invest in other things and still maintain my job and business and even do better. So that is the aim of this community. And another thing I would like you to know, that we are going to do that very soon, probably after we are done with this batch of beginners class and Forex Foundation. We must start picking out traders to support them in terms of funding. We were going to design a program to be helpful for everyone in our community, because we want to be able to support everyone in our community, such that if you're a good trader and a community trader in our community, you don't have to worry about funding programs. Even if it's $100 you have to start, even if it's $200, even if it's $500, depending on how you are committed to the community, we can get to support you with your trading capital, and you start making money on a go, right? So even if it's to sort for other funding programs, we know how to do that. So there are major benefits you can benefit from being a part of this program, being a part of this community, and staying committed and following instruction. Then another thing is we have a learn and earn program. We have not officially announced that thing yet. We launched a program last year, which is a learn and earn program. We call that program Forex Made Easy. So what we do at Forex Made Easy is that we provide you two services, important services, which is copy trading, which is automation in trading, and we also provide you with asset management, where you have an asset manager that oversees your trading accounts in terms of making trade decisions on your behalf, and then you get to profit on that trade decisions. Either way, the results of what we do here be duplicated on your account. So we have a lot that you can benefit from us, and that one does not need your effort. You don't need effort. You don't even need to be online, and you start making money, see your account grow, and all of that. So we are going to bring officially some of this program to life, and to see how to support the community. We are good on our own, but see how to support the community and all of that. So guys, that's one of the information I wanted us to know. And again, the last one, this is going to be the last one, is that some of you don't follow instruction. Some of you, we have messaged you. When you message us that you want to learn how to trade, we send you some instruction. For example, register with a broker, because you cannot trade without following instruction. How are we going to guide you when you don't follow instruction? It's very difficult to guide people that don't, instead of people that don't follow instruction. So if you don't follow our instructions, it's a first sign of unseriousness to us. So we asked the other time that some of you to register your trading account, so that you can start practicing. As soon as we start sharing signals, as soon as we start getting to analysis, you can have a trading account to analyze it. So if you have not opened your trading account, after now, we are going to drop a link for you to open a trading account. If you don't know how to open a trading account, we're also going to drop a video content that's going to guide you on how to open, register, and verify your trading account. Your trading account is your personal asset. It means you have control over it, just like you go and open bank account. You cannot transfer money from one end to another without a bank account. It's the same thing in Forex. You cannot become a trader and trade the Forex market when you don't have a trading account, right? So you need to start somewhere, and that's why we are here to guide you. So any instruction that we drop, please kindly follow that instruction. By next week or by tomorrow, you should be able to complete and verify your trading account. We'll drop the link, and that's all we have to share for today's evening, guys. So somebody lifted up hands before. I can't remember who that person was, but I might have to give the time for the person to say something. If still here on the live, but if not, we are done for today's class. And I'd like to especially thank you guys for staying from the beginning to the end. And I want to believe that all of you have gained value in today's class. I want us to be able to interact, become one, look after one another, communicate, share ideas, and let the community grow and move forward for all of us together. So we will drop also a link of our campaign. please, I'm baking now. Now I'm baking. Support us, support the growth of this community. So there is a campaign that is ongoing on Facebook. So we will drop a link to that campaign. All you need to do to support that campaign is write your honest review about this community and what we're doing right now. Maybe review about this class, that if it was interactive to you or not. Just write your honest review on the comment sections. Share the post, and that's all we need. And by the way, we are going to reward some of the best comments that we have there. Like the comment we had last week. After this class today, we are going to look at who did the best comments and reward that person with a cash prize, right? So do that for us, and God's gonna bless all of us. So thank you guys for tonight's session. I want to believe that we are done at this point. So any other question, please write us on the comment section, write the admin, write the support. We're gonna pay attention and assist you to grow faster. Thank you guys. It's gonna be a good night from here. Good night.